Alright everyone, here we are with ticker symbol SRNE, Sorrento Therapeutics Inc. And before we jump into this chart, I want to say welcome to all my first time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So SRNE has actually had a run up since it hit these recent lows here of about 517, 518, and from that point forward it started to rise again. And here we are currently above the 50-day moving average, and the 50-day moving average is 633. As long as we stay above it, the bulls are in control. The moment we're below it, the bears are in control. So we're going to have to pay close attention here. We're currently at 650 at some important cues here for the bulls to maintain this control and stay above the 50-day moving average. So they're going to need to break through resistance, and that's 660. They're going to need to break through 660, turn that into a support, reach newer highs and new resistance levels to maintain this momentum and stay above the 50-day moving average. So I want to emphasize to all investors, 660, which is a 10-cent difference from where we stand right now at 650. The bulls need to break through 660, turn that into a support, and break away from it to pull further away from the 50-day moving average and get deeper into bullish territory. Super important for the bulls to do that. Now, if the bulls accomplish breaking through 660, their next point of reference would be up here at 680. That's the highest point reached before this started to fall and recently fell below the 50-day moving average. And now we've leveled back off above it. And for the bulls to continue that momentum before even getting to 680, their first step is 660, turn that into a support and reach newer highs. So I want to emphasize the bulls need to break through that so that the 50-day moving average does not catch up to the price, which is currently 633. Now, on the other hand, we have what the bears want. And if the bears accomplish this, they've accomplished two things. They got the stock underneath the 50-day moving average, getting it into bearish territory, and they're breaking through the first support level, which is probably the most important one because it's the second lowest point reached in this low bearish run here. And if they break through that, they could be on their way to newer lows, pulling further away from the 50-day moving average and gaining more control over this chart to reach newer support levels, newer lows, and get deeper into bearish territory. So it's going to be super important for every single investor to pay close attention to how this stock is reacting between 650 and 633 to see if the bears are dominating and tearing it down, or are the bulls trying to reappear and get closer to that resistance level of 660, or are the bears tearing this down? Did they break through the 50-day moving average? How quickly did they do so? And then every investor should pay close attention to the 50-day moving average and support to see if the bulls are trying to reappear and bring this back up, or are the bears tearing this down and getting further away from the 50-day moving average to the point that they broke through support, and how quickly is it moving down? So you're going to want to pay close attention to the behavior of how fast this is moving below that support level to newer lows, or are the bulls trying to reappear and bring it back up? As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watch this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up, also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.